Okay, this is in Chapter 7, Inventory Costing Methods under Perpetual Inventory System. I want you to keep in mind that the word perpetual means ongoing. We are constantly recording information in a perpetual system. This is actually on page 316 in your textbook, and I want you to pay very close attention to what I'm going to go over for this particular chapter, especially with the perpetual grid, because on page 316 down at the bottom under Exhibit 3, I'm going to slide my book up here. This is the grid that we're going to learn to do under FIFO and for LIFO. Now, there's a particular way that this information actually flows, and I want you to pay attention at the top of page 316 where they show you where we bought these items in January and how we're now going to sell these items under the perpetual system. Now, it appears that on January 1st, what we have done is we have sold 100 units. 100 units under the perpetual system. This is actually split up under three particular categories. You've got the purchases category, cost of merchandise sold, and the inventory category. And depending on what you're doing, whether you are buying, selling, or just recording inventory, depends on which category you actually record this information under. Now, we needed to record our inventory, so on January 1st, we put our beginning inventory into the system, and it happens to be 100 units at a cost of $20 each. So we now have a total cost of inventory of $2,000. So, to put the inventory in, it was on January 1st, we put in 100 units that cost us $20 each for a total of $2,000. On January 4th, and I'm getting this information from the top of page 316, on January 4th, we sold 70 units at a total cost of $30 a piece. The sales price is not that important to me right now. What I'm trying to determine what is my cost of merchandise sold and what my ending inventory. So the actual sales price of $30 per unit is important to me for recording a sales transaction, but for the purposes of recording cost of merchandise sold, not that important. I need to sell 70 units, and I only have 100 units. So I'm getting them from the $20 unit. So I sold 70 at $20 a piece. It cost me $1,400. I now have left 30 units at $20 each for a total of $600. On January 10th, we purchased an additional 80 units for $21 each. So we bought 80 units at $21 each for a total of $1,680. And now I have 30 units at $20 and 80 units at $21. On January 22nd, we sold 40 units. This is where the trick comes in. I can't just go pull 40 units. I have to pull what I have. So I'm going to take 30 units from the $20 bin, and I'm going to take 10 out of the $21 bin for a total of $810, and that leaves me with 70 units at $21 a piece. On January 28th, we sold an additional 20 units. I pulled them from the $21 bin for a total of $420, leaving me with 50 units at a total of $21 a piece. On January 30th, I bought 100 units. Cost me $22 each for a total of $2,200. I added into my inventory. I have 50 units at $21 a piece, 100 units at $22 a piece, for a total of $3,250 for ending inventory. And my cost of merchandise sold is gathered from this column here. $1,400, $600, $210, and $420 gives me a total of $2,630 for cost of merchandise sold. So, for the whole month of January, the cost of merchandise sold is $2,630, and for the ending inventory for January 30th, we have ending inventory of $3,250, and you can see that in your books on page 316. However, I want to break this down in a little bit different manner, and I want to record this separately with visual aids, and you'll hear me refer to bins. I like to actually program this stuff and write this down into little boxes so it helps me and helps the end user a little bit. So we're going to take that same information on page 316 and I'm going to break it down a little bit different. It's more of a visual aid versus an actual, and this is not your legitimate format. Your actual format is this grid, but hopefully I can help you a little bit with this other way of looking at it. So if you turn and you're still on page 316, let's take a look at how we could actually make this a little easier for ourselves. Okay? Now, I'm going to draw my bins. Let me bring this out a little more because that's clearly, there we go. I know at some point in time I'm going to purchase 3 sets of inventory. This is my $21 bin. Oh, we'll make that my $20, my $21 bin, and my $22 bin. So on page 316, January 1st, we had 100 units in the $22 bin for a total of $2,200. Or I'm sorry, for a total of $2,000. On January 4th, we need to sell 70 units. I only have units in the $20 bin, so I need to pull my 70 units from here. So I'm going to take 70 units and I'm going to leave me with 30. So I just sold 70 and I have 30 left. On January 10th, I purchased 80 units at $21 a piece. So I now have 30 units in a $20 bin, 80 units in a $21 bin. On January 22nd, we sold 40 units. Well, I can't just come take 40 from here. That defies the purpose of pulling inventory and counting for the cost of merchandise sold. And I can't take 40 from here because that defies the purpose of the FIFO method. So I'm going to take 30 units from here, leaving me with 0. And I'm going to take 10 units from there, leaving me with 70. Okay? On January 28th, I sold an additional 20 units. I can only pull the 20 units from here, leaving me with 50. And on January 30th, we purchased an additional 100 units at $22 a piece. Okay? So I now have 50 units in the $21 bin, and I've got 100 units in the $22 bin. So if I wanted to look at my cost of goods sold, we sold 70 units at a cost of $20 each, and that cost us $1,400. We sold 30 units at $20 each, which cost us $600. We sold 10 units in the $21 bin. That cost us $210. And then I sold an additional 20 units out of the $21 bin, and that cost me $420. This gives me a total cost of goods sold of $26.30 for FIFO. And if I want to look at my ending inventory, I simply just go back and look at my bins up here and I say, well, I've got 50 in the $21 bin and I've got 100 in the $22 bin. So let's add them up. I have 50 at 21, and that gives me 1,050. And I have 100 at 22, which gives me 2,200 for a total of 3,250 for ending inventory. That's how the FIFO method works. So you could easily take this entire paper right here, and try to zoom out so we can look at it some more. Take this paper here, create your boxes, put your inventory in the boxes, calculate your cost of goods sold, and calculate your ending inventory. This is how you could just do it on a scratch sheet of paper to check yourself. The formal method of recording this inventory is in this grid that's on page 316, and I'm going to zoom in on this just a little bit more so we can bring it into play here. On page 316, this is the formal grid of how we record our inventory under a perpetual system. Every time we do a transaction, we're going to record whether it was a purchase, whether we sold it, or whatever our inventory is at the time. And we want to make sure that we capture the cost of goods sold as well as the ending inventory. Now you will see several journal entries that are recorded on page 316, and these journal entries should look very familiar to you because you just did these in chapter 6. And the first one correlates to the January 4th transaction of where we sold 80 units, or I'm sorry, we sold 70 units. We had accounts receivable of $2,100 and cost of merchandise sold for $1,400. You can see that on page 316. This journal entry for January 10th is for the purchase, debit to merchandise inventory, and a credit to accounts payable. The third journal entry is for the January 22nd sale, debit to accounts receivable, a credit to sales. And then, of course, followed up with a debit of cost of merchandise sold and a credit to merchandise inventory, and so on and so on. So you see the journal entries on page 316 along with the grid. This helps you put and bridge chapter 6 and chapter 7 together. So under the FIFO method, we have $26.30 for cost of merchandise sold and $32.50 for the ending inventory. What you have to do is determine in chapter 7 what the cost of merchandise sold is, and again what the ending inventory is, and how to relate it to the journal entries that we learned in chapter 6.